Good afternoon, everyone. Thank you very much for joining us from your home offices and living room sofas this afternoon for our last interactive Q&A session of 2020. My name is Erik. I'm our Chief Revenue Officer here at NEO and your host over the lunch hour. Before we get started, one small housekeeping matter to take care of. We're here for about 45 minutes. We'll get you back out to your regularly scheduled afternoon, no later than 1 o'clock. And the team is very happy to take questions in the chat box below through the presentation. Please send them through and we'll work them into the presentation. Worst case, we'll wrap them up at the end. So to the main event. I am very excited to be joined today by a longtime partner of ours here at NEO. A warm welcome to the team from Subversive Capital Acquisition Corp and their newly minted management team of the parent company, a group that's been making all the noise these last few weeks as they unveiled their plans to leave the SPAC behind and become one of the largest West Coast cannabis multi-state operators in the weeks ahead. On stage with me, Michael Auerbach, President at Subversive Capital, Leland Hench, CEO at Subversive Capital, and the management team from the parent company, Steve Allen, CEO, Dennis O'Malley, COO, and Brett Cummings, their CFO. Michael, love to start with you. Welcome to you and the team. The entire country, the cannabis industry, and every single social media partner I've been traipsing over the internet has been chatting about your landmark deal here and indeed putting together another page for the history books. You and Leland launched the SPAC August 2019. You set a Canadian record there. You're on track to complete the journey now with the parent company. Share with us a bit the journey as a SPAC, how it got started, and the vision you see unfolding in front of us.
Well, thank you, Erik, and sorry, my hair is full of snow. I was having a snowball fight with my 11-year-old before this, but a real pleasure to be here. We're here to present the parent company, which is the largest SPAC transaction in both cannabis and Canadian history, as you mentioned. So approximately 18 months ago, we raised $575 million in a record raise for Canada, with the intention to acquire one or more U.S. cannabis assets. Leland and we took our time. The market certainly contracted in that sort of Q3, Q4 of 2019. And then with COVID leading into Q2 2020, we evaluated over 100 U.S. private assets in that time frame. And we kept coming back to the same conclusion that California really is the largest cannabis economy, not just in the United States, but in the world. And it's certainly the best opportunity in a post-prohibition market, which we see now, the end of prohibition with the tailwinds of the last election ending within the next 12 to 24 months. And we also believe that these names will be able to dual list on a U.S. exchange within the next calendar year. We're also so basically what we did was we chose the two leading operators in California as our transaction, so Caliva and Left Coast Ventures, to build the most well-equipped, vertically integrated omni-channel platform in the state. We're also expanding, and super excited about this. We're also expanding our existing partnership with one of the world's obviously most successful and visionary global icons, Jay-Z. Jay-Z is going to join us as the chief executive officer. Or sorry, he's going to join us as the chief visionary officer. We haven't given him the title of CEO yet. The chief visionary officer of the parent company, and we did a 3-year partnership, exclusive partnership with Roc Nation, whereby we'll have unfettered access to all of their artists and athletes as we announce additional brand partnerships in the next calendar year. Desiree Perez, the CEO of Roc Nation, will play an integral part of the company moving forward, and we're really excited about that partnership. We plan to really build the most impactful cannabis company in the world with both our operational platform, with Dennis and Steve and Brett at the helm, but also with our social platform and our cultural impact. The war on drugs is essentially over. And it's our responsibility to attempt to right the wrongs of prohibition. And that's why we're launching a social equity platform, a social equity fund, off-balance sheet fund to to invest in Black-owned and people of color entrepreneurs in the cannabis industry. We're seeding it with $10 million to start, and we're going to contribute 2% of our net income every year to continue to fund these operations and these entrepreneurs by finally providing equity to the communities that have been most harmed by the war on drugs. So that's basically it. I mean, this is the moment now to build the first 100-year company in cannabis, and California is the right place to do that. It's the most important economy in cannabis, and we've created a platform that will bring about the most dominant cannabis player in the market that will continue for generations to come. And so with that one, and I hand it over to the executive team. Steve Allen, as you mentioned, is our CEO. And I'll hand it over to him, and we'll have Dennis and Brett present as well throughout the presentation. Again, thank you very much, Erik, for all your support. The NEO has been a huge supporter of us since day one, and we really wouldn't be here without your continued support. So thank you.
Our absolute pleasure, Michael, and it's a testament. You know, you spent a lot of time putting all of this together clearly, and coming up with a pretty well-rounded vision and approach, and bringing it all together now with this. Steve, you know, over to you. Tell us a bit about California. Give us a bit of a view. You've been in California for some time now. Give us a bit of a view. You've been in the market for some time now.
I appreciate it, Erik, and Michael, I appreciate it knowing that I wasn't replaced by Jay-Z in the last hour. In the last hour. So as Michael said, you know, we're excited. As Michael said, you know, we're excited because what Michael and Leland have been able to bring together between the platforms have been able to bring together between the platforms of Caliva and overarching. And the overarching icon influence awareness that comes with Jay-Z icon influence awareness that comes with Jay-Z and Rock Nation. It really is unique. Be in a position to dominate the California cannabis market. Be in a position to dominate. We really view it from California cannabis market. Areas are the growth. We really view it from margin and differentiation perspective and margin and differentiation perspective. It is the largest market in the world. It is the largest market in the world. It's also no clear leaders. The most fragmented during kind of the first 3 years of regular, kind of the first 3 years of recreational use regulations versus what was recreational 20-year regulations versus quote unquote medical 20 years no regulations. You know, quote unquote medical, but really no regulations. Stops and it's been a lot of that really is starts and stops and prepared the parent that really to have an incredible opportunity to gain market share, because of the fact that there are no clear leaders in any vertical category whatsoever. The other aspect of California, the way that it's built, is you really do need to have a very robust, vertically integrated platform. As much as cannabis is synonymous with California, the reality at the end of the day is that the legal recreational market is still nascent, and so it is difficult to rely on other participants to build around it. And we've done partnerships in the past and ultimately made the decision to end those and go it alone. And that's where, again, piecing together these assets does an incredible job of giving us the most robust vertically integrated platform in the state upon which to build organically. But then also, we're talking about the largest balance sheet in all of cannabis within the U.S., not just California. And so the roll-up opportunity is there. And having that platform allows us to be able to both diligence, and then once we absorb these companies, to really maximize the potential value they have, because we can solve any and all of the problems that they would have in their growth trajectory, which is access to raw materials, distribution, working capital, a direct-to-consumer platform. And so that really gives us that ability to win the margin game, but then also to be able to acquire and roll up in a very efficient way and be able to pull out the maximum value from those. And then the last piece really is, bringing the Jay-Z Rock Nation piece to the fold, is that no one's won in California yet because it's rough. It's tough to win the awareness play, right? I mean, there's severe limitations on marketing. There's only so much you can do with a billboard, right? And there's no television advertising. There's no Google or Facebook ads. And so you really have to win the earned media playbook. And that's where, partnering with Jay-Z and Rock Nation, it brings that recognition. And so when we look at that California marketplace, we see that this unique combination of assets does put us in a position to dominate California and to roll it up. And so that platform, those products, that marketing and brand influence Erik cover really does create this perfect storm for the parent company to come out on top here in California. And then our belief that, who wins in California will win across the country, because it is the most competitive state. We have built those sharp elbows and know how to compete on a highly competitive margin squeezing environment and understand what that means longer term.
Incredible. And what I'm taking away from that, just hearing you speak, and obviously the previous conversations we've had getting into today, credibility, balance sheet. You've got two existing pretty powerful companies combining together to become one stronger entity merged together. And ultimately what I'm hearing is really leveraging the SPAC vehicle to do something that probably independently was going to be a little bit of a journey on your own. So really leveraging the uniqueness of the SPAC vehicle itself to come on in and create a pretty tremendous opportunity. Maybe Brett, time to bring you in to the fold here. We've heard a bit about California from Steve. Michael's given us a bit of the vision. Talk to us a bit about vertical integration, if you don't mind. Where are you headed? What's the mission from here?
Yeah, great. Thank you. When you talk about vertical integration, it's not a new concept, but it is a new concept in California, especially at scale. And so just kind of running through the assets that we have today, looking at the cultivation side, we've got about 8,000 pounds a year coming off the indoor cultivation facility in San Jose at the Cleva. That's grown to about 12,000 pounds a year. Pretty soon we're opening up a few new rooms. On the outdoor and greenhouse side, we source biomass and flower from about 500 farms. We have forward-looking contracts where we're off-taking that biomass, and whoever controls clean biomass ends up controlling the distillate market. And you can see from our extraction business, we currently provide about 20% of the distillate sold to the legal California market today. And what you'll see is this really is the engine in our access to clean flower and clean biomass, so the raw materials that will go into our manufacturing. When you look at the numbers, this part of the business standalone will either stay flat or maybe decrease a little bit, albeit the business itself will grow. But we'll be taking off a lot of these raw materials and inputs into our manufacturing process for our first party products. On the manufacturing side, we have 7 facilities across the state. We have the current capacity to produce 20% of the market demand for flower, vape, and pre-roll. So Cleva's been in this business for 5 years. Left Coast Ventures have been in for just over 3. We've spent the time and the money building out the platform. And so the CapEx that we need for this part of the business is really low, probably about under $5 million for the next 24 months to be able to meet this large market demand. On the brand side, as Steve was mentioning, we think brands will win, especially here in California and going nationwide. We have 17 brands on the truck today, over 250 SKUs. We'll have some rationalization as we put the 2 brand portfolios together. And then as you saw from the launch of Monogram and the Monogram House of Brands, we'll be adding some additional some brands and brand houses to the fold as well. On the distribution side, in most businesses, you wouldn't look at wanting to own distribution. In cannabis, it's a competitive advantage. So we distribute all of our products. We're one of the few companies in California that has full state distribution, normally getting product to dispensaries in often 48 hours, but definitely under 72 hours. We have 70% coverage of all active dispensaries today. So we're in 450 accounts out of about 650 total. And then on the omnichannel retail approach, we're able to reach over 50% of the California population today through our 3 retail stores and 5 delivery depots. And this will be a major focus of ours for organic and inorganic growth, reaching 90% coverage of the California population by the end of 2022. So going to the right-hand side of the page, just a real quick example on the value vape side. So normally, if you're focused as a kind of manufacturing and distribution, middle supply chain, you might make a 35 to 40% margin on these products at the high end. This is for a $25 value vape, which would be the lowest cost vape on the market today. Going to the right and looking at the platform that we have today, if we're sourcing the biomass, extracting into oil, putting it into one of our vape carts under one of our brands, and selling to a consumer either through a retail shop or through delivery, we can drop the price by 20% to $20, which would be comparable to illicit market prices, and which we're still making a 73% gross margin on the product. So really, really powerful in terms of pricing. For us, this isn't a race to the bottom, but it's a way for us to get market share, and it shows our ability to get more brands, especially in the categories we care about, into the top 5 or top 10.
Amazing. Actually, it's a good time maybe to bring in a question from the audience. We had a question earlier this morning. You've got a lot of logos on the backgrounds behind you. Question directly, are Caliva, Left Coast Ventures, and Rock Nations now subsidiaries of the parent company, and the remaining logos are brands or product lines? Is the question from the audience.
So Erik, maybe I can just address the brand portfolio. But Steve, you want to address the structure of the company first?
Yeah, from a structural perspective, yes, it will be a holding company, the parent company, and then it will own underneath it the different assets that'll be rolled up under it. We will be, coordinating and integrating those assets together. But yes, the way to view it is there's a holding company with the subsidiaries below it, and those subsidiaries, increasingly working together in the processes to ensure that we're optimizing all of our opportunities, both from a marketing and branding perspective, but also from an operational execution perspective. But Dennis can walk you through more around the brand side of it.
Yeah, thanks, Steve, and thanks, Erik. I think the perspective of it, certainly we're very excited, at Caliva around the parent company and the combination with Left Coast Ventures. Caliva has certainly been known for our large-scale, high-quality indoor cultivation, as well as our extensive direct-to-consumer footprint in the San Francisco Bay Area and Los Angeles. And partnering with LCV really allows us to access low-cost raw materials. So you'll see an expansion of our product portfolio into that value tier, specifically around flower and vape, and we're really excited about that expansion. But looking at the brand portfolio, our brand portfolio today is the largest in California, and it really addresses all the user segments and need states and price points. And as you can see here on the slide, we sold 5.6 million units of THC products across 20 different form factors in the last 12 months, and that is among the largest of any single brand portfolio in the state. And where we think this is really significant is that the consumer journey for cannabis is complex. So while the existing consumer, we really believe that we're going to take market share from that value category, we really believe that the breadth and depth of our product portfolio is going to be the choice for that new consumer. And certainly one of the areas that we are most excited about was our most recent brand and product launch was Monogram. So we launched that in a conjunction with Jay-Z. So Jay-Z's flagship brand that launched last Thursday to much fanfare, so much so that Saturday Night Live covered the launch last Saturday, including the 3 independent pieces on CNBC as well. So it covered both the business and the consumer sentiment. But this is an ultra premium flagship brand that will serve as this umbrella brand for other, as Michael mentioned, Rock Nation artists to be able to both endorse and build brands under this Monogram house of brands. So we're extremely proud of what was brought to the world under Jay-Z's creative brand genius, and I'd say the acceleration in terms of that earned and paid media that we're seeing is certainly the playbook that we look to continue to develop for Monogram, but also for future brands to come.
Brilliant. And I confess, I think I read every single one of those articles when they were rolling out, and probably watched 2 or 3 of the videos. So it's a testament to how quickly you and the team can roll out a message and have it hit the continent, never mind a specific state. Incredible work.
The one from Vogue is a good read today.
I have missed this morning's. I will have to catch up. Dennis, maybe since you're chatting, you're up against a lot of competition in California. We had a bit of a view from Brett on the illegal market in California. I think you guys were covered in a little bit of that space on some of the live chats. Can you give us a bit of a view on the legal and illegal market and where you think you're going to position in the long run?
Yeah, absolutely. And I think it's really important, Eric, to distinguish what the illegal or illicit market really means and how that affects operators in California. But just backing up a step, as you mentioned, California is absolutely the largest cannabis market in the world. It's also the most competitive cannabis market in the world, and it has the most discerning consumers, who have a long decades history with cannabis in this state. And that's why we really have conviction that when we win in California, that we can win anywhere. But we are seeing an absolute sea change of our ability to be able to succeed in California and be a dominant company and dominant brands. And to give you some proof points, around that, we saw in this election cycle that there's more municipalities than ever. In fact, there was 31 cities and counties passing pro-cannabis legislation in this election cycle. So in this time of COVID, all of these municipalities see that cannabis is a growing industry. They need jobs, they need the taxes, and frankly, we're one of the most successful retail brick and mortar industries out there. So when we break out the illicit market, there's two aspects to that. There's one illicit market where California grows more cannabis than any place probably in the world. Majority of that is shipped out of state as a unbranded flower, and we don't see there's a lot of that changing. That actually generally helps us in terms of the prices of flowers tend to stay consistent and increase on that. Really where we're focused on and where the governor has provided a lot of support and enforcement to is illegal dispensaries. So the ability for branded products in these products that have been known for instance, like VapeGate, have been sold through these illegal dispensaries, and it's these illegal products. We're really seeing enforcement efforts in all of these cities and counties, simply because they are now spinning up their new regulatory processes on this. So when you look at the longer term, as Brett mentioned, we're coming out with a price and value and quality metric that for a vape and a flower that just has not been seen before in California, which I think is going to absolutely compete with the illicit market. But when you look at new consumers, which is arguably a much larger market in the time of COVID, they're looking for safe and convenient ways to be able to shop for their cannabis. So they're going to look to providers like the parent company, who can provide things like curbside pickup with integrated ID verification and electronic payments. They're going to look to consistent tested products that they can rely on for pain, sleep, and anxiety. So our branded packaged goods strategy with low cost raw materials and the new regulatory framework in the long term, quality products and competitive prices with great service are ultimately going to win in this competitive market.
Couldn't agree more. Hallmarks of any successful business, you've got to be able to walk the talk, so to speak.
Absolutely.
And it sounds like you and the team are very well positioned on that front. Leland, I'd love to bring you in to the conversation from here. You've had a long history in capital markets, obviously attached to the SPAC since its inception. Wrap this all together for us. What does this deal mean for investors? And that's primarily our audience today. And I'm sure there's going to be a ton of questions that get peppered your way, of course, as we go through this. But talk us through the transaction. We'll have to grab the mute button for you, Leland. Sorry about that.
Thank you, Eric. So here's our transaction overview page. One thing we've tried to do through this whole transaction was to focus on alignment to maximize shareholder value. Both the targets are effectively rolling 100% of their equity into the parent company. They're not cashing out, but they're investing in the future success of the company. So they're rolling everything into the company and working behind it. The total upfront consideration is $500 million. That's 92% of the common stock and $40 million in cash. This results in forward trading multiples that are more than 50% below the last public cannabis comparables. We've done a few different things to align further with the shareholders. So we have an earnout structure, which is based on milestones on pre-specified trading prices, 13, 17, and 21 of those prices. so well above the IPO price of 10, further to incentivize management and targets to align with the shareholders. Prior to announcement, we completed a private placement of $36.5 million. This was to guarantee sufficient cash on hand to close the transaction. So this transaction will close. Closing of the transaction is expected to be in the first half of January 2021. Post-closing, we expect equity value to be approximately $1.1 billion with the enterprise value expected of $614 million. This implies working capital position of $562 million that will go to support with organic and inorganic growth strategies. So that's a brief overview. If you think about where this market has come from and where we are today, we priced this transaction in October. And if you see what's happened in the marketplace, you have seen a significant rally of 30 to 40%, depending on which symbols you're talking about. So we've priced the transaction at $10. The market has rallied. We've went in with a decent discount of 30% as well. So you see that discount in our stock price. So there's a few dynamics in the marketplace. Obviously, it's a big SPAC market, and people are still, some of the SPAC consistent investors are moving SPAC money around. It's created a dynamic where our stock trading at 10 to 10.25 is a strong buy compared to where our comparables are. So I think that's the transaction. Open any questions on the transaction if anyone has any.
Got a couple from the floor I can pepper in. A couple questions about status of approvals. I know you mentioned a mid-January target. Anything that you can share, of course, around status of the various legal reviews and approvals?
I'll give that to Michael since he's the chairman and he's been right in the middle of it.
In terms of the U.S. regulatory changes on the horizon, so we're pretty bullish. I am close to the Biden-Harris transition team. I do think that within the first quarter, maybe going into Q2, we'll see some movement from the Justice Department on revitalizing something similar to the Cole memo, which would make certainly the U.S. listing agencies comfortable. We won't see the major tier one banks getting into this business until something happens on the federal level, which we anticipate from a legislative perspective to happen within the first 12 to 24 months of the inauguration. And so the end of prohibition will most likely happen in stages, but the end outcome within the next 3 to 5 years will be a descheduling of cannabis, a removal of cannabis from the Controlled Substances Act, and cannabis being regulated almost identically to alcohol and tobacco, probably more so on the alcohol side than on the tobacco side. But that's where we see the end of prohibition shaking out.
Brilliant.
So definitely real movement within the first 6 months of this administration, which will obviously have a significant re-rating of our name.
And if you talk about the de-SPACing process into the parent company in particular, looking at the equivalent of the SEC in the US or Ontario Securities Commission here, anything that you're able to share with the group at this point?
No, I mean, we filed our preliminary prospectus. We'll receive the final prospectus, any day now. We anticipate the end of our redemption window on or around January 12th and closing the transaction on or around January 15th.
Brilliant. A couple funny ones. I just had a good chuckle. Maybe a couple ideas you guys threw around when you were deciding on tickers. Do you have the final tickers for the resulting issuer, the parent company, when it's done? And if you can, what are they?
We do. It's a secret. It's gonna be big splash. It's gonna be fun. It's a fun ticker. So I think everybody will enjoy it.
Perfect. Then we'll sit in suspense until the middle of January. Another question kind of related, maybe Leland brings you back into the fold as well in terms of your plans. Obviously, you got to get through this deal through middle of January. But have you started thinking about that M&A pipeline? How much revenue, EBITDA can you buy with the working capital you've got? And what do you see as your valuation targets? What do they look like?
Thanks, Eric. That's a Steve Allen question. He's been answering that question for a while. It's inorganic and organic. I'll let Steve run through that.
Yeah, thanks, Leland. Yeah, Eric, when you look at it, we are talking about a significant amount of capital on balance sheet at the end of this transaction. For the forecast that we've presented here, it's really a use of proceeds of around 100 million of that. So you are talking about quite a bit left over. So that 100 million really is Brett touched on a little bit. It's about 5 million towards manufacturing. It's about 40 to 45 million towards that direct to consumer omni-channel expansion. And it's about 40 to 45 million of working capital. The remainder of that is opportunistic capital that gives us the opportunity to execute an M&A roll-up strategy. Now, when you think about the priorities there, specifically, it'll be around the barbell ends, right? So it's the beginning of it around cultivation, which is right now we do source the vast majority of our outdoor and greenhouse cultivation. To make sure that we have the supply chain secured, we have secured just over a year's worth of biomass in forward contracts that allows us to not have to run out there quickly and scramble to get cultivation, but it does create an opportunity for us to evaluate it, because at the end of the day, that still is margin that could ultimately fall towards the bottom line if we did own those processes and if we could find the right targets. And so we are in conversations there, and we'll see how things go. And the other end of the barbell is at the direct to consumer retail and delivery side of the house. And we do have plans, as Brett discussed, to roll out and move from 51% to 88% of the population covered over the next 24 months. In some of those cases, we are going to look and see opportunities in the analysis of build versus buy to buy to get into a market faster than it would be in the application process through the build out, which often can take 12, 15, 18 months versus an opportunity if it makes sense to buy directly into that space. The last bit I'd say is we are going to be a combination of opportunistic and disciplined. We're not going to overpay or chase assets. We do have the opportunity to be able to ingest and actually extract a lot of value out of some underperforming assets out there. And so we're really going to continue to evaluate how they fit into our strategy, whether it's a unique, form factor that's been built up, or a unique product. If it's a brand that has an interesting and sticky consumer base, those all become, again, build versus buy analyses. And we're looking for, best fit, best in class operators out there that believe in and understand our vision for rolling up California and beyond to bring into the fold. And, after the closing of the transaction, there'll obviously be a lot more information that we can share around the M&A strategy, and you'll start to see some of that rolling out fairly quickly afterwards.
Brilliant. Thank you, Steve. Maybe a question on some numbers. I know in the presentation you had 185 million estimate there. I think the question from the audience, revenues for 2020, and how confident are you in that estimate? Given that we are 2 weeks away from the end of the year, we're extraordinarily confident in the numbers at this point in time. I wish we only had to forecast 2 weeks out every time. It'd be great. No, but the reality is we're very confident in those numbers and very confident in the 2021 numbers as well. We have the plan, and we started to execute on that right now. It really is about how we bring these synergies together to do that. And at the end of the day, if you look at this, the bulk wholesale really is the securing of the supply chain that we can then turn into branded product that goes into both the wholesale and direct to consumer channels. And so that really is a key component of bringing together these assets, is that we now have that platform. And so we really can step on the accelerator from a growth perspective on the branded product side. And then because of what we've been able to demonstrate and learn across the retail and delivery side, we also know that the game plan that works for that, and are looking to roll that out in an accelerated fashion. So, excited to be able to increase our market share while also growing the overall cannabis pie, and really being able to take that dominant position, as well as really to have the best margins in the state. Yeah, I love it. You make me laugh. You know, as in the chair I'm in here at NEO, if I only had to do 2-week forecasts, that'd be a dream. I'm gonna have to write that one down for next year's suggestions. Maybe Leland, this one might come back to you a bit, but there was a question from the crowd about who the PIPE investors are and how much of their own money they're putting on the line, and is there any lockup on the investors in the PIPE? I'm not sure if that is a question for you, but I maybe thought I'd try.
Yes, that's for me. So there is no lockup on the PIPE. It's a little over 3.5 million shares. It was all friends and family or targets and current investors. Rock Nation, as a partner, they have some people that got in, but it was friends and family round. And once we got to our $36.5 million, we closed it. But it will be freely traded on the starts of the de-SPACing.
And just to clarify, for U.S. holders that custody the shares in the U.S., there will be a lockup. For holders in Canada, there is no lockup.
Brilliant. Thank you. Thank you for that. I'm still getting some hilarious guesses on the ticker symbol in the chat box. So guys, I'm sure there's still an opportunity to throw in your ideas. I'm curious to see what you come up with. A question from the crowd around future plans, and you're obviously a West Coast MSO focus today. Any thoughts on branching your way east, or are you truly focusing on ultimately the West Coast cannabis market only?
Yeah, Eric, it's Dennis. I think I can take it. I mean, it's certainly, the market opportunity in front of us is California, and we're very focused in terms of dominating California. And we truly believe if we do dominate California, that carries over well to be able to, go out and be a leader in other states, including New York and New Jersey and the tri-state area. But as we look at our out-of-state expansion, I think what is an important takeaway is the differentiated business model that we have as compared to previous MSOs. So whereas previous MSOs really invested in a lot of significant capital infrastructure and really redundant infrastructure per state that was extremely capital intensive on that. We are really looking at an asset light expansion strategy. And when we say asset light, it's the higher value, higher margin parts of that demand chain that we believe are going to be great partnerships for those who have already invested in infrastructure in places like the tri-state area. So specifically, the brands that we're creating, Monogram's a great example. It's not just a brand, it's actually the packaging, the formulations, the SOP, all of that, the underlying technology that manages and really runs this omni-channel consumer experience. So as mentioned, it's taken us 3 years to be able to develop this proprietary technology to enable this true omni-channel experience. And then if you package that up with what Michael had talked about around this Rock Nation partnership, which is really earned media at scale that we clearly have seen over this last week, whether it's the social posts from TJ Khaled, or whether it's the traditional media covering this. Package that all up and work with a provider that has invested in infrastructure. So that asset light approach in that post-prohibition economy is, we believe, a faster, more scalable, more profitable way to grow, which is very different from what the MSOs have done. So certainly we believe brands are built in California and New York, and the tri-state area in New York is certainly on our target list for the next state for expansion.
Brilliant. Thank you, Dennis. And maybe an interesting segue, it's you're building something special already. You've clearly got a vision for where you want this to go, and the team has clearly looked at a number of transactions. I think, Michael, you referenced hundreds on your way through with the SPAC. Curious to hear a bit your thoughts and defer to you guys on who best to position it, but how the parent company is going to stack up and position against what I would dub kind of the established majors. You look at your Curaleafs, True Leaves, Cresco, and Green Thumb. Curious to hear your thoughts. I'm sure you've done the analysis.
So analysis on what specifically? Just
thinking about balance sheet, market cap, market penetration, thinking about positioning really, and where you want to take the organization. You've obviously got some competitors in different parts of the state.
Yeah, I mean, I honestly believe that the MSOs do not have a moat post-prohibition. There's some great operators out there, and we have a lot of respect for, what Cura and Trulieve and GTI have done. We just have a different view of what the end of prohibition looks like. And so for us, we're just not interested in sort of following that duplicative asset route with large expenses, in each state that we operate in. The end of prohibition will allow for interstate commerce. Brands will be made in Southern California and New York. Cultivation, in the first instance will come from California, Arizona, and Nevada, not from upstate New York and central Illinois. And so, we believe that, companies like Trulieve and, others will be, incredible, very popular retailers in their states selling our brands at some point.
I love it. Well, it's exciting times ahead, and maybe perhaps being mindful of getting folks back to their calendars today. I'll maybe dabble through one or two other quick questions. I think there have been a few from the audience about access to U.S. investors on Robinhood in particular, and I know as someone who's looked into that for a few of our other partners, obviously. You're on the OTC markets in the U.S. at present with your ticker. I'm sure you fielded the question a handful of times. Any update you can share to the Robinhooders in the crowd?
I mean, we would love to obviously be on the Robinhood platform. Robinhood is going through an IPO process. As you've seen, they were fined by the SEC today. I don't think that's the last regulatory investigation that will go into the platform. None of the sort of very popular apps like Webull and others are trading OTC shares, other than like Nestle, Nintendo, and Adidas. We're actively engaged with all of those platforms to see if we can get our OTC share available. We're hoping to get some good news on that in the next quarter.
Brilliant. And of course, in the meantime, your OTC ticker remains incredibly active. And for those other U.S. investors who happen to leverage other platforms, obviously they can always open up a Canadian account.
We trade through every platform, basically. So E-Trade, Fidelity. We actually have a list of the top ones on our website, subversivecapital.com, and our tickers SBVCF. Sorry, always forget that. And then it will change to a ticker. So keep your guesses going. If you successfully guess, 10 shares for free.
Ooh. You heard it here. Brilliant. Well, maybe Michael, it's good to hand the microphone back to you as a segue out of our session today. You've covered, I think, a brilliant overview of the organization. We've heard from Steve, we've heard from Dennis, we've heard from Brett about the fundamentals of the business, where you want to take this in the future. Leland's given us a view on how you leave the SPAC and head for public company listed here on NEO in Toronto, Canada. A bit curious, Michael, from your end, a quick wrap up, anything you missed that we weren't able to share with the audience today that you wanted to impart on them?
No, I mean, I just think the most important part of the transaction for the audience here is that we're coming to the market at a 50 to 60% discount to our comps. We've cycled through almost 50% of our float. We're going to close sort of mid-January. This transaction will close with an enormous balance sheet for real domination and consolidation in the state. And so there's an enormous re-rating of our stock coming on day of closing. And so, now is the time to buy in this name.
Brilliant. Thank you, Michael. Steve, Leland, Dennis, Brett, thank you all very much for joining us over lunch today and for sharing a bit of the journey that you've been on this past year and a half, Michael and Leland, specifically for you, and obviously with the rest of the team. January hopefully marks the beginning of another chapter in the journey. Being a public company is certainly not for the faint of heart, and I think you already get a bit the sense of that on your way out of the SPAC. We're out of time today, unfortunately, but grateful for you choosing NEO a year and a half ago. We're very proud to be partners with you on this journey, and as you always do, don't hesitate to reach out if we can help. Very grateful to have new partners in your management team and the parent company as you explore 2021. So thank you for sharing. I'll maybe add a quick note to the audience. The investor relations email address at Subversive Active Live. I'm sure these guys are having a hard time keeping on top of that inbox, but keep your questions coming. And we look forward to hearing the results of the ticker vote heading into next year. Signing off from here. Thank you all very much for your time.